Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, my guest is Bruce Kaserman, and he is the president of BGK Financial. Bruce has been a financial services professional since 1985 and is a fiduciary, Series 65 investment advisor, and National Social Security advisor. He works closely with business owners and professionals to help them make informed decisions about retirement planning, Social Security strategy, and long-term financial security. Welcome, Bruce.
Thank you, Gary. Thank you for having me.
Sure. So, Bruce, you've been doing this a long time, and have really seen you've seen a lot. I'm going to say kind of the wild, wild west down to being clamped down on everything to being loosey-goosey to being really clamped down on stuff. How have you seen the financial advising industry, really change? Because again, everybody uses different names now. If they're a wealth advisor, or if they're an investment advisor, if they're a fiduciary, and so forth. So it kind of like seems like everybody thinks that all of those are interchangeable, and they're really not.
Absolutely, Gary. You happen to be right. I started out believing that as a stockbroker with my Series 7 and my Series 63 back in 1985, going ahead and using the telephone book to try to get accounts. Today, right now, because of the education I have received, and as I matured in this business over the past 40 years, I've gone ahead and I've made myself, I'm not going to say that I'm a subject matter expert, but I've been around and I've seen everything that's out there right now. And as a result, when there are different situations that occur in the market, or for tax planning, or for if a person needs income right now, I can go ahead and read the situation and advise them the best way I know how to.
I mean, one of the things that I think a lot of people, especially, as we get older, are thinking more and more about is Social Security. And you've gotten a lot of education, and designations on being a Social Security advisor. Now, in layman's terms, what does that mean to us?
Basically, what that means, Gary, is at what age do you claim for your Social Security? Right now, as we turn 65, or I should say, as I am turning 65, well, okay, I get to claim for Social Security if I want to get full Social Security benefits at age 67. However, if one were to claim prior to that, you're not going to be getting all of your Social Security. And the other thing to watch out for is if you're still working and you think, hey, I'm going to get this extra money to go ahead and use as income so I can go ahead and live a little bit better. Well, guess what? You're only allowed certain thresholds that are out there to go ahead and make money. If you make more than that, Social Security is coming after that money to take it back. So you're not going to be getting your whole benefit. So the best thing to do out there is to have the right claim strategy. And it depends upon who you are. I always try to advise those people that are high net worth people to wait till they're 70. However, there are different extenuating circumstances. And that's really the bottom line, more or less, that you have to be able to, look at the all the situations and then make a decision. Like, for example, and I'll give you one quick example. Recently, I told one of my clients that him and his wife should wait till they're 70 to claim Social Security. Well, the wife, who was a homemaker for the most part, she was a piano teacher, so she wanted to take her Social Security at 65, and she wasn't really giving piano lessons anymore. So I said, go ahead and claim your Social Security at this point in time. The husband basically say, hey, why can't I go out and do that? I said, because you're still working part-time, you're making more money than what you need right now, and guess what? They're going to take it away from you. Would you rather the government take away the money that you so deservedly earned during that time, or would you rather wait till your full retirement age where no one's going to touch it?
Yeah.
That you don't think about it.
So if somebody, if full retirement is 67 and you're saying that you're telling this gentleman to wait until he's 70 before he starts drawing, on average, what is it accumulating and why would somebody want to wait?
Usually it goes up to 125 of what your Social Security check is supposed to be. So let's just say you're getting $3,000. You're getting additional monies right now. I can't tell you the figures. I'm not a mathematician.
Right.
I know this whole thing, but you're getting more money than what your retirement age was going to be, right? If you understand what I'm saying.
Yep, yep. Now, if I start collecting Social Security because I want to work later in life, beyond 70, if I continue working, does that continue adding to what I may get
Yeah,
from Social
it
Security?
ends up to your year total. So in actuality, your Social Security benefit will go up higher.
Yeah. Okay. Okay. I think that obviously there are a lot of people who aren't sure about that too. Um, there. With lots of times with the business owners, lots of times they want to take smaller paychecks because they don't want to pay payroll taxes. How is this going to affect them later on when it comes to collecting Social Security?
They're going to actually, because they don't want to pay the payroll taxes, they're going to actually get less in Social Security benefits because government wants to make their money no matter what. It depends upon when you want to go ahead and get and take it out. I mean, what I would suggest to do something, if somebody wanted to do something like this, is to probably buy the cash value life insurance policy and do it that way and try to make it easier. So this way, you're putting money into the cash value life insurance policy. This way you're not paying taxes because life insurance industry has it so that on a cash value policy you could borrow against the cash value of the policy and therefore it's not considered to be a taxable distribution. That's a way to go out and try to avoid this scenario out there.
Right. So Bruce, I'm glad to hear that you're talking that hey, it's kind of different for everybody, and there's also other strategies because there's a couple of uh, people in the industry that talk very loud on a lot of different I'm going to say a lot of different shows and stuff like that and their voice is always collect Social Security as soon as you can, and that doesn't always work for everybody.
It depends. And the other thing that people should be worried about, Gary, is the IRMA surcharge on their Medicare
Yep.
Part B and Part D premiums. That also depends upon what type of income you're getting right now. And the other thing to be worried about is this. Suppose you're a married couple and I'll give, I hate to say to be prejudiced here, but let's just say the husband dies. All right. The wife's going to get all this money. She's going to be tax arbitrary, and she's collecting Social Security. She's getting survivor benefits from the Social Security. And guess what? The government's going to go after all this income that they've had right now. And I mean, I've seen in some cases that you end up owing the government money that you're not getting a Social Security check. So you want to do the proper planning that's out there right now. I usually advise somebody to go 15 years. I mean, I guess for a person who's 65 years old, start out planning at age 50 to try to go ahead and do strategies. But for people who are looking to retire at 62 or are looking to make the plan, I should say, at 62 or 63, I'd go ahead and start doing strategies. There are different ways that we can go ahead and work this thing out. And the bottom line is to make sure that you're paying as little or perhaps no tax on your B and D premiums for you and for your wife. And that's really what you want to do.
Yeah. I just think that people worry about if Social Security is going to be there or not, but there's not enough talk about the different strategies that there are with taking Social Security, of when and how and the effects, lots of times people do worry about, hey, the Medicare premiums I have coming out have increased, and like you said, that Big Irma down in DC wants to, wants to hit you for a little bit more. So it's important to really do that income and tax planning to try to avoid a lot of this.
It certainly is, and I would hate to self-promote myself, but I'm actually holding two dinner seminars on February 10th and 12th over at Tyson's. If people want more information on it, on the armor surcharge, I brought in a subject matter expert who's going to be talking the whole time on the armor surcharge. So if any of your listeners or any of you professionals who you do business with want to attend this seminar, please contact me and we can always get you invited to these dinner seminars.
Great,
He dates
great.
February 10th and 12th.
Yeah, definitely. And we'll bring that up here at the end when you're giving your contact info and stuff, so we can
Sure,
certainly talk about that again.
sure.
Um, tell us about the book that you wrote.
I wrote a book, Retire Like a Shark. I was actually a co-author of the book. So what I did was I did investment strategies, and what I'm trying to do is I'm trying to prevent drawdown on people's investments because the market is very volatile, and sometimes markets don't go up the way that they want the way that you want them to go up. And what I try to do is I try to protect people's drawdown in their portfolio as well as the risk tolerance that people do. And I use a variety of methods in going out and doing that. Just to let you know, I now am a registered investment advisor. I have my own registered investment advisory firm. I use blended portfolios and I use risk tolerance tools to go ahead and measure each person's risk tolerance. And what we try to do is either I could do my own blended portfolios or I have a company based out of San Francisco, Main Management, that set up preordained portfolios for people, which we try to lessen the risk involved and to limit the drawdowns.
Yeah. So so many people, especially in the baby booming era, worry about outliving their money. Can you talk about that?
Oh, I absolutely could, because that's what I do. I help folks that are late baby boomers or people a little bit younger than that try to make their money last as long as they do.
Yeah. So I guess how do you calm their fears of thinking that they are going to outlive their income? Because I always have clients in all the time, and that always seems to be their big concern.
Well, it's really about dignity and independence, their healthcare choices, lifestyle, and not becoming a burden. So, what I try to do is I try to replace anxiety with a clear plan. In other words, a person, one client's biggest worry was choosing between medical care and helping the grandchild. Planning helps remove that trade-off.
Get, tell us what you did about that.
Okay, fine. Just recently, I had a client where we were trying to protect them with the armor surcharge. And unfortunately, he decided that he couldn't do this particular, do the life insurance policy. The reason being is that his daughter ended up becoming a financial burden to him because his daughter was divorced. She couldn't pay her mortgage. So he ended up paying off bills for that. So sometimes, the family, you got to go ahead and decide what's more important. If, in this case, for this particular client, that was more important to help out his daughter here than to worry about his, longevity, whether or not he's going to survive Irma. And maybe we'll get back to that. Maybe we won't. We're hoping maybe his daughter gets on his feet, and that would be we can go back and plan. It might cost him a little bit more money, but he feels better about it, and that's really the bottom line. So I'm trying to allay fears of going out and doing something, and at least explain to them the options, what they need to do, and that's really it.
Yeah. So, Bruce, tell us, kind of, again, you've been doing this since 1985, and we're here now. What has been the big change in the financial advising arena from when you started to now? What's the big difference that
I
you see?
guess instead of worrying about total overall return, the end is how much money will you have in the end, and whether that net income beats all the headline returns. In other words, what do taxes do for people, and what can and especially in the healthcare arena, especially what everybody's reading these days with the Affordable Care Act and everything, and really. Basically, what we're looking to do is just make sure that in the long run, people don't outlive their money. That's the most important thing that's out there. And those are the real changes that are out there because anyone could show a return out there. It's what you do after that's the most important.
Yeah, yeah. I always tell people it's like, it's not how much money that you make, it's how much that you get to keep at the end of the day. And you really need to kind of look at it that holistic approach where it's not just how much are you making, but what's being taxed, what isn't being taxed, and how can I hang on to more of it.
You're 100% correct, Gary.
So, if couples are planning together, because I see this, quite often, where couples are, their taxes and so forth, they're talking, but they don't always agree upon stuff. How do you help a couple that isn't necessarily agreeing on the financial plan and how to get them to work a little bit more harmoniously together?
I try to get meet with both people, both parties separately. I try to have, and it's usually the first meeting that's out there, that we end up doing. I ask them a set of questions for 20 minutes each, the husband questions and the wife questions, and then after that, we're going on a second meeting and we're going to discuss what the results are, and just let you know what I generally do as an advisor is I offer two complimentary meetings. And the reason why they're complimentary is I want them to find out as much about me as I want to know about them and see whether or not it's a fit for us to be doing business together. Because I want to make sure that the goals out there for each party are realistic, that we can go ahead and we can make sure this whole thing works.
Right. I mean, I think that's a great idea of having the individual meetings, then get together because obviously, especially if somebody's been married for a while, they stopped listening to each other a long time ago.
Oh,
So this
absolutely.
is
I've been
all.
married for 38 years, my friend, and I'll tell you, I mean, my wife never listens to me, unfortunately. Even just now, until I said to her, we needed complete quiet for this podcast, and that was
Right.
almost it.
Yeah. So it's so many times we have that selective hearing. So that's
Oh,
always good.
absolutely.
Um, what do you see? And again, right now there's a lot going on in the world here in the US and everything. What do you see in the next year or two as being, um, let me say, some of the trigger points that you're really looking at that you think people aren't seeing right now?
I think you got to look at the taxes, and the other thing that we have to see what to do with the OBBBA, which is the big beautiful bill, and I think we got to plan along that, even with investments, and even whether or not we should go ahead and take out Roth IRAs, whether or not we want to set up the new Trump accounts for our children. We got to look at everything. We got to look at the tax ramifications and. That's the one thing that I'm doing right now for my practice is I'm actually getting a tax certification right now to make sure that I'm better. Even though I've been doing this for 40 years, I'm making sure that I'm better in going ahead and finding the problems that may be out there.
Yeah, yeah. No, there's definitely, I definitely preach a lot about, picking the right team and letting them help you create the right plan for you, but getting out of the way and letting them talk. Because I think so many of the pieces with the financial advisor, the estate attorney, your CPA, your corporate attorney, everybody kind of needs to talk to be able to make sure that they're putting the best plan together for you.
You'd be very, very surprised how many people don't do that, and I always recommend doing that. And if, especially, there's some, and I'm not going to pick on you because you're a CPA, Gary, but there's some
Yep.
accountants that think they know better than what I know, or even some
Oh,
estate planners that know, planners that know more than I know. And the thing is this: we all got to work together as a team. If we don't work as a team for the client, guess what happens? The client ultimately loses.
oh, 100%. And it's like, and I'm going to say it's the old telephone game. If you talk to them and you tell them something, and then they come to me and tell me, the story's not going to be exactly the same. And that's why I always say it's like, okay, sometimes the client just needs to get out of the way and let us talk. So then that way, you know, you're talking about, hey, look, they bought, I got NVIDIA stock for them early on. What can we do to help offset some of this? And you may not know about another account that they have somewhere, or they may have some other
You'd be
losses from a previous sale and so forth. So if that
You'd be
communication
surprised
isn't happening,
you'd be surprised. I'm sorry for interrupting you. You'd be surprised how many times someone like me doesn't know about the other account, which also
yeah,
is a pain in the neck to me because here I am, I'm trying to work the best possible way I can, and all of a sudden there's another variable out there, and that's a pain. The other thing that I have noticed, what I did say is when the other professionals, whether that be the CPA or the attorney, and I can't stress again, don't want to listen to me. And, I'm handling the person's investments and handling everything. And I'm trying to do what's best for the client. I mean, I just recently had a scenario where a CPA was just talking over me. And here I am. I'm trying to make sure in retirement that the client's getting getting all their money. And, we're trying to lower the ramifications for taxes. And this person wasn't talking to me. I finally said to the client, I said, how, I mean, are you married to this CPA? I think I could do better, for you. And I'm not trying to take away business for the person, but the point of the matter is that the CPA is not doing their job for a client, especially when one has over $3 million in assets. Then,
right.
like, what's the point?
Well, and there's a lot of differences also, just like with financial advisors and what I'm going to say, what your specialties are and how you do things versus, I'm going to say, tax planners are, as compared to what it sounds like you're talking about is more a tax preparer. And I think lots of
She
times it's
she
that
she
tax,
files she files taxes. I don't know if she was a tax planner, but
right?
she was filing taxes and she wasn't being proactive as
Correct.
opposed to anything else. So just so I can explain that better. And I've evolved. I used to be a stock picker, and
Right.
as I've evolved in my 40 plus years of doing this business, I do retirement planning and I look at the whole picture here.
Yep.
And I mean, and when I first started in this business where I took a lot of risk for people's monies right now, as I've aged, I've not been as risk averse for people. So I'm the same. I'm the same way. And what I've gathered is many of the people that I'm now working with are more around our age, and they kind of understand where they're going. I mean, their biggest concern right now to me right now is who's going to succeed me.
Right.
And I have ideas. I'm not going to say who's going to succeed me, but
Right.
I want my clients to be handled in the same way that I handled them, and I want them to have the relationship. So whoever I bring in to the practice, it's going to be someone who has been around me for God knows how long, and this way they're going to understand everything.
Yep. 100%. 100%. So, Bruce, we covered a lot of stuff. We could keep going because I think that this is what we're talking about right now is a huge topic that more and more people need to talk about, and it really needs to be brought to the forefront of these professional teams that people have and getting them together. And there's no reason why your attorney and your CPA and your financial advisor can't do planning together. And I'm going to tell you, if you have the advise any one of your advisors not doing planning for you, you need to find that new advisor, one that will do planning, that will talk with each other. That's for sure.
Absolutely.
So, Bruce, what have I not asked you you wish I had?
Okay, I guess what I wish you would have asked me is exactly what is retirement income planning? And I think the most important thing is healthcare right now in terms of retirement income planning, because as I mentioned to you before, it seems like health insurance premiums keep on going up, and
Mhm.
and this hasn't even been solved yet. And that's an important thing to try to go ahead and solve for the person. You want to make sure that they're covered for their health insurance premiums, because that's the biggest downfall of how people don't prepare for for the income planning that's out there. They don't prepare the right way, and that's important. So one of the areas that I do handle is Medicare planning for those who are turning 65, and depending upon what their income is, depending upon what they're about, I recommend the various options that are out there, and what you have to understand, Gary, is not one size fits everybody.
100%.
As a manager of mine, Dean Witter, said to me, you got to sell them the right shoe size. And even if they want a purple sneaker, you got to do the right thing for them.
Right, 100%. So, Bruce, if people like what they hear, they want to talk to you, they want to find out more, how and where can they find you?
They can find me at bgkfinancial.com. We're the local retirement pros. I could be reached at 703-242-3659. My cell phone number is 516-695-2407. And my email address is Kaserman. That's spelled Kas as in Sam, M as in Mary, An as in Nancy, the initial B at bgkfinancial.com.
Great. So, Bruce, give us the dates of your Social Security seminar,
Now these are
and where it is.
these are Irma dinner seminars, Gary, and they're going to be at 801 Chop House, which is in the Tyson's Corner area, and they're going to be on February the 10th and February the 12th. Okay, between 7 o'clock or I say between 6:30 and 8:30 p.m.
Okay. And
Okay.
then they can register, go on your website to
They
register
can they
for
can
it.
either register to me and use a link that way, or I could send them to where they can register.
Great.
Just as a disclaimer, seating is going to be limited, so it's going to be first come first serve to come to this. But if we get a nice reception and turnout from the seminar, it doesn't mean we won't be doing more of them,
Right, right,
because
100%.
very few people out there are actually talking about the armor surcharge, and we want to be on the forefront of this.
Definitely. Bruce, really appreciate your time today.
Thank you, Gary.
Yep. Hey, this week our guest was Bruce Kaserman, and he is the president of BGK Financial. And I'll see you guys next week.